Good morning, everyone. Welcome back to Capital Markets Quickie. I'm your host, Andrit Sella. Today is a very important day for the Federal Reserve, or the Fed as we often call it, because they, the central bankers, are meeting up to discuss their next steps regarding interest rates. To hike them, pause them, or even cut them? That's the question. Now, many are speculating a hike in November, and a pause or maybe even rate cuts as early as Q1 next year. But here's the twist. Right now, oil prices are skyrocketing, and it is very likely that they will surpass $100 per barrel. And that is bound to stir the inflation pot, making the Fed's job a lot trickier. So let's listen carefully to Fed Chef Jerome Powell's words today and tomorrow, because markets hang on every syllable, so he should be very careful with what he says. Now, shifting gears a bit, here's a good question. Is now a good time to buy bonds? Well, it seems like it, right? I mean, the 10-year US Treasuries are yielding nearly 4.4%. Remember, when yields go up, bond prices drop, and vice versa. Last year, around late October, I don't know if you can recall, but US 10-year Treasury yields peaked above 4.2%, but dropped to around 3.3% around late March of this year. And ultimately, bond prices rose because of this. But now they're edging back to around 4.4%, meaning the yields. And if inflation keeps climbing, we might see yields rising further, and that means that even the prices for bonds yielding at 4.4% right now, well, they would also fall. So for those thinking of snapping up bonds, well, tread carefully and always stay informed. I mean, who knows, maybe there is even another peak ahead of us. Now, I don't want to get too technical, but as far as bonds are concerned, the longer the duration of the bonds, well, the higher the risk is of prices changing due to changes in yields. In my humble opinion, bonds are attractive, but only with a short duration. If you're looking to build wealth over the next 10 to 20 years, well, you're probably way better off investing a good amount of your money in the stock market and being patient. That's it for today, everyone. I'll see you guys tomorrow with a brand new episode of Capital Markets Quickie, where we'll talk about the latest fund manager surveys from Bank of America, Merrill, and Lynch. Cheerio.